Hey everybody, it's Craig Berry with Acopia Home Loans, Atlanta area's #1 mortgage professional, and I'm coming to you once again right outside of my office today in Ackworth, Georgia, where it is hot. So I'm out here bright and early at 7:45 trying to beat the heat, and it's supposed to get up to 100 today, so hopefully you're staying cool wherever you are today. I'm talking today about PMI. It's one of those acronyms that have definitely a negative connotation associated with it, and that's because it contains the word insurance. And if you're like most, you don't like to pay insurance. That is until you need it. So PMI stands for Private Mortgage Insurance, and then FHA has MIP, which is Mortgage Insurance Premium. Both of these are forms of insurance that you pay that is collected by the lender in case of default to offset the risk associated when lending the money. So, some myths associated with PMI. First of all is that all PMI is bad. That's not true. PMI is neither good nor bad. It actually can be a good thing, believe it or not, because it allows people to get a mortgage that wouldn't otherwise qualify. So is that a bad thing? It's debatable, but I say no, because it allows you to take advantage of today's low rates and today's home prices and get into a home rather than renting and get the tax deduction and everything else associated with home ownership. Some other myths associated with PMI is that you do not have to have PMI on all FHA loans, especially if you're going to put down 20%. Not true, unfortunately. Whether you're putting down 5%, 20%, or 50%, you're going to have to pay PMI, unfortunately, or at least in the case of FHA, MIP. So it doesn't matter how much you put down, you're going to pay for it. How much you put down does, however, impact the length of how long you will pay for it. So that's another thing to ask your lender. And then the last myth that is associated with mortgage insurance is if you put down less than 20% on a conventional loan, there are some options for not paying mortgage insurance. Unfortunately, that's not true. Now, that's not to say that on paper it won't appear that way. And that's because there's something called lender paid mortgage insurance. LPMI is the acronym. And what that allows you to do is take a slightly higher interest rate and not have the mortgage insurance at least appear on your statement when you're making your payment, and that can be a great thing. So you definitely want to look into the options of borrower paid mortgage insurance, lender paid mortgage insurance, and even there's a couple of other programs out there that are great with reduced mortgage insurance. Fannie Mae and Freddie Mac have Home Ready and Home Possible, both of these meant to help out with mortgage insurance. So you may qualify for one of these many types of mortgage insurance. It's not all created equal, so it's definitely a reason to talk to somebody who's knowledgeable in this area. I'd love to talk to you about it. I'm here for you. Anything mortgage, anything real estate related. Oh yeah, I wanted to talk to you about how to get out of PMI before I let you go. So 3 different ways you can get out of PMI. Pay down the balance to 78%. And the two important terms there are paying down and 78%. So you have to pay it down, not just wait till your home's value gets up, but pay down the balance, and it's 78%, not 80. The second one is once you get to 80%, you can request an appraisal from your lender. And the third one is to refinance and just get out of it. You're going to get a new appraisal at that time anyway. But once again, not all mortgage insurance is created equal, and not all mortgage professionals are created equal. Talk to somebody who knows what they're talking about, who's passionate about what they do. Hopefully you'll find that to be me. As always, my contact information is on the bottom. You can call me, you can text me, you can email me. I love what I do, and I'd love to chat with you. Thanks so much for watching today, and until next time, I hope you have a great week.